Okay, you're about to listen to a crazy podcast. This is Tom Kradza, and on this episode of the Your Life, Your Term show, we sit down with James Su. Now, this email has been in my inbox since at least January, where we were trying to coordinate this chat, and it never came together, mostly my fault, but we finally pulled it off, and James Su has been gracious enough to come and sit down here. He's a longtime Rockstar Inner Circle member, actually worked with Mike DeZormo on our team some time ago. Actually, you're going to hear his story, but the crazy part is wait till you hear how he quits his job and then dives into real estate investing here in Canada, but then takes it really to the next level when he starts buying straight up malls. Like I'm talking about shopping malls in the US without really knowing what he's doing. And that's the best part. Like he did stick to the fundamentals. I mean, you know, he's a smart guy, but I mean, he didn't have experience. He probably didn't have the full team around him, but that didn't stop him. This guy has a lot of guts, and it takes us a little while to break into the exact details of what he started doing in the US, but wait till you hear about how he started buying some of these properties and some of the returns and what he's doing now. So just a great guy. We're honored and grateful that he came in and sat down and shared his story with us. Feel grateful that he's a Rockstar Inner Circle member. And listen, this is what makes the Rockstar Inner Circle membership so amazing. We have people like James Su hanging out, sharing what they know. And when we all share between each other, that's what we're trying to do here with this podcast, with the membership that we run, with everything that we're doing. It's Canadians helping other Canadians, all to live life on our terms. So thank you, James, for sharing this information. Just a blast talking to you. I think my jaw literally dropped at one point in this podcast, and you'll hear what I mean. And if you're listening to this and you're trying to figure out what is this membership, what is Rockstar Inner Circle all about, you can go to rockstarinnercircle.com/member, and you can see all the benefits that you get as a Rockstar Inner Circle member. That's rockstarinnercircle.com/member, and you could check it all out for yourself. And if you want to come to one of the introductory training classes about real estate investing that we hold here, you can go to CanadianRealEstateTraining.com for that. You can grab a seat. Jenny or Anthony from our team will call you, reserve your seat, confirm your seat with you, give you all the details and so forth. That is at CanadianRealEstateTraining.com. And with that, let's get on with the show.
Are you ready to live life on your terms? Is it time to take charge? Real estate, business building, the economy, health and nutrition, and more. It's the Your Life, Your Term show with Tom and Nick Kradza. Are you ready? Let's go.
Okay, we are live. Yeah, 10 grams.
10
so
grams.
James, do I pronounce your last name Su?
Yep.
James Su. James Su is here with us. He graciously battled the Toronto traffic for an hour and 20 minutes to be here with us. So we really thank you for doing that. And as a reward for doing this, we have given James a chocolate bar that, you know what, that was like a Finnish guy that was some biohacking conference in Toronto. And he was sitting at this booth and all he had were these chocolate bars. And it was like he was trying to save the planet Earth by saying we shouldn't drink coffee because of all the garbage it creates just from the beans, but more so the cups and stuff, and that his preferred way to digest or consume caffeine was in this chocolate format. So each of these little bars apparently has the same caffeine as one espresso shot.
Wow.
So
you can taste it.
No, you could taste it, and you need
coffee,
water. Yeah. See how like it's bitter, and then you really. So yeah, if you have that, just get ready. Okay, but it doesn't. It's not like gonna.
It's not bitter though to me.
Yeah, no, just like kind of like
coffee bar, cascara.
It's hard to like digest or something. Chew, swallow, whatever.
Swallow. Well, there's lots of sugar in here. 8 grams in this little thing. You're trying to kill me or what?
How I'm not having one. No, 8 grams sugar. You can deal with that. Sheesh.
You need some sweet to balance out the bitterness.
Yeah. So James, pull the mic always right in front of you. We need to hear your voice. So
Tom's just ordering you around. See?
Yeah.
Hospitality out the window.
Yeah, James, get the freaking mic and put it into your face.
It's close enough?
Yeah, that's perfect. That's perfect. So James, tell us, you're investing in I don't know even you're investing in the States in commercial real estate.
Yeah.
Okay. What type of commercial real estate are you investing in the States?
So we're particularly in retail, and it's interesting that we decided to go into that route with among many other sectors, but it's been one that we've been very comfortable in, and over the last 6-7 years or so, about 7 years now, we've been acquiring steadily and growing steadily.
And so, but you're living here in Toronto.
Yeah.
Born here in Toronto?
No, so I think most of us other than Alex, probably first gen.
Yeah.
Yeah, so first gen, I came when I was 12 from Taiwan, and just love Toronto. Go Raptors.
Yeah, totally. No, we were just telling you how Kawhi's totally not going to re-sign in Toronto. Listen, I love Kawhi. I think he's like the freaking savior, but he's not going to re-sign because the population base in the U.S. is 350 million. It's just how many of the, what is this, brand New Balance? My son keeps laughing. He's like, Dad, look, he's with a New Balance, but how many New Balance tracksuits and shoes is he going to sell when he's in the States versus in Toronto?
Yeah.
Like, I'm pro Toronto. I want him to re-sign, but like dollars and cents, man. He's going to sign with L.A. or.
But you know what?
Knicks.
He'll be the first like star that leaves Toronto and re-signs somewhere else, and
That we cheer for.
Everyone won't care.
Because we just thank you for saving us and getting us to the finals.
No, but the fact that he signed with New Balance, I feel like maybe there's something to signing.
Because New Balance is like not a big brand,
right? Like, well, in terms of basketball, anyway, I think that they didn't really have any signature shoes.
No,
right, before Kawhi signed them.
No,
so
even the shoes he kind of wears, they kind of look a little funny. Those New Balance shoes, but anyway, we still are big Kawhi fans. So walk us through this. You get here at 12. Like, I'm just trying to map how you get to investing in the U.S. Can you tell us a bit of your
Not
story?
just the U.S., the U.S. retail.
Yeah, U.S. retail market, but you're living here in Toronto. Like, walk us through that. You come here when you're 12. You go to school here.
Yeah, well, I grew up in the Forest Hill area, in the apartment on Bathurst and St. Kilda. That was my old hood, and then we moved to North York. But I went to high school in Northern Secondary, and then I went to Waterloo for engineering undergrad, and then I was working in corporate.
That made your parents proud.
Yeah, typical Asian.
Waterloo engineering.
Yeah.
You scored all the marks on that one. Yeah.
Yeah, it's funny. Like the population, the student population, the engineering, it's pretty lopsided. So
you can say whatever you want to say, James. You can say whatever. But so you go to university, engineering. Do you graduate with an engineering degree?
Yeah.
What type of engineering?
I did mechanical.
Mechanical engineering.
Yeah. So I actually did most of my 90% of my co-op term in automotive, so that was the natural path. Right after I graduated, I had terms in Toyota, Magna, and a couple of the other R&D firms. But there was a course that I took in fourth year that really changed my mind. It was energy conversion, and then after that course, I decided to go into nuclear. So I actually worked for SNC Lavalin for 3 years at the Bruce Power.
So you're a nuclear, and you were a nuclear
I was
engineer?
So I was.
Sounds smart.
It really
sounds like something I couldn't do.
It sounds totally great.
No, but we're in the manufacturing. Well, not manufacturing, but the construction side. So we were managing. I was managing towards the end of my corporate career. I was managing construction bids for contractors on behalf of Bruce Power. So that I did that gig for. I was actually living up there, commuting back and forth on the weekends and stuff. So it was a pretty brutal 3 hour.
Where's the Bruce Power plant?
It's up in Kincardine.
Okay,
yeah,
it's
on Lake Huron. So
got it.
All the way on the other side. So
so then you graduate university. That you go into that as a full-time job.
As a full-time job.
That description was you working full-time for SNC.
Right. Lavalin, and I moved on to AMAC Engineering.
Okay.
I was working for the NSS division, which is the nuclear division that they had acquired. And then, but actually, so. I think most of us probably all read the same book that got us started. I read Rich Dad and Poor Dad before I graduated, and that was one of the books that kind of let me, all these pondering about what to do.
Yeah, what the heck am I doing? Oh my gosh, I'm in the wrong quadrant. I'm a freaking employee. My life sucks. What did I do?
Yeah, absolutely, and that really.
How many people can blame where they are today on that book? And I don't mean blame. I obviously mean thank. Right? But, cool.
Yeah. So then, because I read that, and there was a stretch when I was working in SNC Lavalin, I was just the I guess being fresh grad, and they really give you very limited responsibilities. So I was left to you can only browse for so long on the internet, back in like 07
Yeah,
or 08.
remember? Yeah. You feel
Especially
like
then
you
because it
read-
was slow.
Oh,
Even in corporate, it was
yeah.
like slower.
So I was like, man, this is not what
I remember one of my buddies around that era sent me an email once, and he said, "I've read the entire internet. It's over." And he was in a corporate job where he just had like endless hours to do nothing. He had one of those jobs, and he's like, "I literally read the entire internet. I have nothing further to read."
that was the same sentiment. So then I was like, man, I can't go on and do this. So that I elected, because I actually was based out of upper middle, which is just up the street here.
Oh,
Yeah,
right
yeah,
by
yeah.
right
but
at
so I was-
403 there.
Yeah, I was commuting, and then I decided to go up to Bruce because it was more exciting. But during that time, I actually got exposed to at the time they ran that Rich Dad Poor Dad seminar.
Oh, okay.
Yeah, so then I signed up to that. First, they get you in that 2 day free, and then it's like 3 day for one.
Was that still 2007, 2008?
Yeah,
time
yeah,
period? Okay,
yeah, absolutely, yeah. And then I finished the 2 days, and I did the 3 days, and then
See, Nick and I both went to those things before it was the Rich Dad. We went in the earlier 2000s when it was different names that were doing it,
Yeah.
but same kind of thing.
Yeah.
Come to town,
Yeah.
teach you how to be a real estate millionaire
Yeah.
overnight.
But the
basically.
business model was different because they still upsold. I don't think they upsold as much, but the upfront initial cost was much higher. Then they changed the business model to make the upfront costs
A little bit.
lower and have more courses that they upsold throughout the thing,
yeah,
which was an interesting transition time to see them change it. Because when we went, the initial weekend thing, I think it was like $4,000 or $5,000, right? Something like
Whoa.
that.
Yeah.
Wow.
Yeah.
Right.
Okay.
And then it went down to like 15, it went to 2, then 1,500, then
they-
$1,000
I
bucks.
guess they
Yeah.
just-
I think it's 500. A lot of those guys, what they do now is the initial, and then they sell at that thing.
Smart though, because it was such a big leap to get people to spend 4,000 or 5,000. You
Yeah.
get people to spend $500. Give
Then
them a
they're
lot of
partially
information.
committed,
Yeah.
right?
Yeah.
Anyway, okay, so like us, you went to these different
Yeah,
things.
and then on the third, so after you pay, I think it was like a 3 day seminar. They really get you. It's like, if you want to make changes to your life right now, sign up to this coaching segment or whatever, and that was like 32 grand.
Holy smokes! Back then, that was
Yeah,
that
it
much?
was like you can take like a 4-course bundle with coaching, and I'm pretty sure it was like
So did you do
32,000.
it?
Yeah, so then I whipped out my credit card. I didn't have 32,000,
Whoa.
right? So then
That's serious.
yeah, so I dragged one of my buddy in, and I guess the rest is history.
Wow, but it seems to work out. So you take this course.
Yeah, so the first couple bundle was, one of them was rent to own. So I took that and I went out and I did a few. I did like 4 or 5 in the GTA. Actually not GTA. Kitchener, Barrie.
Awesome.
And then it's interesting because when I met the same people that started the course with me on following sessions, and I was like, oh, have you guys gone out, and how did it work out for you guys? And I think a lot of them probably just
Did nothing.
Did nothing.
Oh
Yeah.
yeah, that's the norm. I
Yeah, and I, like the first deal I did, it was zero money down. I had a desperate family that wanted a place to live, and so they put up, I think 25,000. My down payment was only like 15. So I went out and I actually got it to work, and I was like, this stuff works, right? So then after I think I did some creative financing course, and then I believe that's when I got a hold of you guys.
That long ago?
Yeah,
Oh,
so
wow.
I was actually part of the original. Which
yeah.
No way.
Yeah.
I called it income for life.
Yeah,
way
yeah,
back then?
yeah. So
Holy smokes.
it was, I think, one of the Your Life. I think the membership back then was maybe like 100 people.
Oh yeah.
Yeah.
So,
It's
I mean,
smaller.
Kudos to you guys. This is phenomenal what you guys have done. It's
Yeah,
it's
cool. Thank you.
fantastic.
Thank you.
Yeah. So I actually I did one deal with Mike in Kitchener. That was like 09 or 2010.
Oh wow, I didn't even know.
Yeah. So then because Rich Dad, they have that at the time they have an inaugural event in Florida.
Okay.
That it's like a platform with a bunch of like other.
Other trainers,
Other
and they're selling
trainers and
their
selling.
systems or whatever.
So
right?
then I ran into a gentleman named Scott Shield. He was pitching his commercial academy program. So same thing. I was just like, oh, you know what, this is exciting. I could probably do this. Having done like a few deals at that point. This is
You're
like,
still working in the corporate world.
yeah,
at
yeah,
this point.
yeah,
Okay.
yeah. So I did that, and that's pretty much actually what got me started, understanding the numbers, understanding what I needed to do in terms of getting deal leads and what demographics, all that. So he goes
Got you started in the U.S. retail
into the commercial side of, because he teaches retail, multifamily.
Okay. So commercial as in like
Retail,
not industrial, but retail. So
retail
not
strip.
office retail.
Yeah.
Okay.
Yeah. So that's pretty much how I got my foot in the door. But I didn't actually do anything. Because corporate was pretty busy at the time. I moved positions. Towards the end, I was managing a pretty large scope of projects up in Bruce Power. So I got really busy, and then I had a business opportunity. So I left corporate to take on that role. I had some partners that were doing commodity trading. You guys love this. Commodity trading. We're buying gold from like general public.
Oh, Tom, but Tom, I don't know if it's not physical gold and it's just paper gold. Tom,
No,
Buying
it's
from
like
the general
your
public.
change.
buy
your change.
yeah. Okay,
Yeah,
I gotcha.
So we
Don't buy my chain. I like my chain.
So what were you doing? You were buying gold from the general public.
Yeah.
And
So
then reselling it.
no, we were just wholesaling it back to the refineries.
Got it.
Yeah. So we actually set up shop in
So there's
Southern
enough margins in
California. It's tight, but make it work.
You set up in Southern California.
Yeah, Southern California. We had stores in Vancouver, Toronto. So
How many stores did you guys have?
At that point, I think 5 or 6 stores. So
How many of you guys were running the business?
It was two of us.
Two of you?
Two of us. Yeah.
Huh.
Yeah.
Yeah.
So
What happened to that business? You ran it for a few years. And
I ran it for a few years, and then I actually sold it to another partner because I just maybe it's because of the engineering background. Like I wasn't enjoying stuff that you can't scale, and that was very intensive. Like when I was back home, I'm back in Toronto. Guys are closing shop at 9. They gotta call me. I gotta check all the sales numbers and all the stuff. And by the time I finish, it's like 1 o'clock, 2 o'clock in the morning.
Yeah.
And then it was pretty draining for 2-3 years. So then I just I think I went back to one of the seminars that Scott was holding because he holds them probably 2-3 times a year. So I went back. I think it was like 2012 or 2013, and I was like, man, I don't like. I gotta focus on this part of the.
So what did you do then? You bought your first commercial real estate in the States?
Yeah. So actually, we were kind of testing the sort of the idea of kind of a test pilot. So I was pitched a deal, a self-storage facility in Sacramento.
How were you pitched a deal?
Just networking.
Okay.
Yeah, so like one of the events, actually I won't segue into that. It's, you guys heard of JT Fox?
Why do I feel like I've heard of that?
That sounds
name, maybe?
familiar.
Yeah,
but
it was
I'm
another-
gonna say no.
It was another coaching program that I
Okay,
signed
okay.
up and I spent like $10,000 and it was like,
You've made some real investments in coaching programs,
I,
but it seems like
Yeah,
you
but it's
put it
paid
all
off,
to
it looks
work.
like,
Yeah,
yeah.
yeah.
no, I'm I think the fortunate thing about me is even as much as ridiculous as the cost is, I was able to benefit from that.
Well,
So-
you're
Totally.
obviously someone that does something. Like there's people that get caught up in just the learning and they never end up doing anything with it. You started doing stuff with it from the very beginning with the rent-own property in Kitchener, right? So, yeah. So
That
I
was-
mean, there's
that was
something to be said
fortunate,
for
yeah.
that for sure. I don't know about fortunate. You kind of put your boots on the ground and you got busy, right?
Yeah.
So
So you get pitched this thing in Sacramento, a self-storage unit.
I had no idea what
Please tell me you just bought this thing.
we timing was on our side because we just came out of the recession. So it was like an ex Kmart that was converted into a fully climatized self-storage system, and we got in at like $2 million something.
When you say we, family members? or-
At the time, I had to convince some family members.
Of course,
yeah.
sure, yeah.
So it's-
These aren't small
it's all-
purchases, man. You just like jumped in from.
Yeah.
So you're living in Toronto, and like one of your first purchases outside of the country is in California, and a self-storage unit from a converted Kmart.
people I don't even know, and
Yeah.
that taught me a lot actually. I was
Yeah, I
involved
bet.
in the I was involved in the business side of things because they
I'm sure you were involved in every side of things, but yeah, keep going.
the owner was so we were silent partners, and like we learned basically how not to treat your investors. Like the operating agreement was so lopsided that we had no rights whatsoever, and that was
So you were buying like shares
yeah,
into this
into this new
investment group?
JV,
Okay.
into this failing self-storage that was
And who was operating it? Like, who was running it? Who had the management control of this?
it was the partner, the major shareholder. He had
Okay.
like 50%. So we only had
organized all these real estate
Right.
investors together,
Right.
took money from everyone, said,
Right.
"I'm going to manage. You guys are silent partners."
That's right.
Got
That's
it.
right.
Okay.
So it was like that was like the first like JV 101, like what not to do. And we actually, so the reason why I thought that was, it worked in the sense that in terms of, how the performance of the product really reflects. Sorry, the valuation really is reflected on the performance of the asset, and so when we bought in, it was like 20% occupied, and it was generating negative cash flow. But we just saw the hard real estate. It was like in the dense suburban Sacramento. It was probably 400,000 people in the 5-mile radius. Middle low middle income, 60-ish thousand average household income at the time, and we just felt like I at least my intuition told me that this is a management issue. Now, like the reason why it's not doing well. So anyway, so we hired a new management team, like a site super, and he did brilliant. Like within 8 months, it got up to 90-something% occupancy.
So why is this a bad investment? You said you learned a lesson because you're a silent partner. Everything sounds good.
So up in this point, you're like, oh, great. Like when are we going to get the dividends or the preferred returns and stuff?
Okay.
And it didn't come
The
for
operating costs
months.
magically.
Yeah,
start eating
it's
up
like,
all the
there's
profit.
like expenses here, expenses there, leakage everywhere, and I was like, this is not right. So then I talked to because we hadn't been involved with the operation. I was like, so they're telling us like he was sending us two different sets of numbers. Like the financials you sent us is different from what the actual property was, the facility was generating. So I was able to find that out by talking to the operations manager.
And whenever you hear there's two sets of numbers,
Yeah,
that's
not
automatically
good, yeah.
not a good
Yeah.
thing.
He's like, oh yeah, the guy's driving a brand new Mercedes, and we're like, well, okay. I mean, he's got other ventures and stuff, but anyway, so I ended up having to expose him of this, and then I had to hire a pretty expensive legal.
Holy smokes, man! You've been through a lot. Okay.
Yeah. So we forced the sale. I had a lot of the transcripts. I just pretty much assembled a log of all the things that transpired, and
The engineer side of you kicked in, I'm sure. Yeah.
evidence gathering,
Yeah, yeah.
and then we.
You
It was-
forced the sale, but you were in a majority.
I know. So
So you rallied the other silent investors to get onto
no,
your side.
all the silent investors signed the same contract. We had no rights, but he had committed pretty much.
Okay, so
Fraud.
you were proving that he committed
Yeah,
fraud.
and that was the major pain point for him. So then he was like, you know what, just we'll just sell it. And then so I think we made like 80% in 18 months or so. And it was like that was kind of the first four
Jesus, talk about
18
diving
months,
into the
yeah.
deep end, man.
I just mean, 18 months, you went through a lot. I mean, the return's good too, but I just mean there was a lot of learning going on in that year and a half, right?
Yeah, it was
So at
being
this
the
point, you're
naive
out of the
and-
corporate world. You had started that gold business. You're out of that business. This is a full-time endeavor for you at this point?
yeah.
Okay.
Yeah. So then we got into through the broker's contacts that we made. We got into like a 92,000 square feet shopping center in Denver, and it was kind of a value add
I
deal.
like how
but
this started at rent-to-owns in Kitchener, and now we're at a 92,000 square foot shopping center in Denver.
yeah, it was a pretty big jump.
Yeah,
Not
yeah, to say the
gonna,
least. Okay,
not gonna
so
lie,
sorry,
so-
I cut you off.
Yeah, no.
Describe this one.
So it's so part of the I guess the fundamental that Scott was focusing on and the teaching that I'm really appreciative of what he's brought to thousands is that you got to focus on the fundamentals, right? Retail, I know there's a lot of like retail that dying and all that stuff.
Yeah,
but
the retail apocalypse in the U.S., right?
So and it's not couldn't be further from the truth. Like I think they're projecting another 6,000 store 10,000 store closing by end of this year, and then another 6,000 in 2020. But retail is evolving. It's actually not. In my opinion, it's not dying. It's evolving because everything we touch, like experience and feel, food, entertainment, that's all retail, right? So it's just a matter of being readapted to higher and better use. And in certain locations, you could convert them into higher, like apartments or whatever if there's enough density. So one of the key matrix that we looked at is demographics. And so in our experience anyway, retail always follows job growth, and those are synonymous. So we tend to look into areas that have tremendous job growth, and they kind of went through a huge boom after 2012, 2013. So that's kind of what.
And
is
this a group of investors who purchased this shopping mall, or you yourself?
So I started raising capital through family, friends, and now it's a lot of times just referral based.
Awesome, very good for you.
So
okay.
And again, it's been very fortunate. Like we try to be as honest as possible.
That's good.
Yeah,
Generally a good thing.
Yeah,
try to be as honest as possible. Sometimes we just,
Sometimes
completely
people
full of
from
crap,
their own
but,
stuff.
it's just we tell you how it is. Like investing, there's risks, right? So
Totally.
make your own judgment. We're not here to push, make hard sells.
And how did you do that as a Canadian? You set up you just open up a corporation in, I don't know, Colorado to buy this thing?
That's another.
Yeah.
That's another.
So is this multiple U.S. corporations that need to be set up?
So at this point we had so that's another
disaster.
we
Just give me the high level.
Yeah, so
it's a U.S. corporation.
Earlier days, we were dealing with a lot more U.S. intel, and they don't know anything about the CRA requirements. Nothing. Yeah, so they tell you you can set up an LLC. It's easy, and then you come over here. You're like, oh. So we ran into some of that earlier on, and so in the high level, I think the best way to strategize is just do a limited partnership, and then you have a blocker limited partnership up in Canada where the Canadian go in, so that you're not obligated to file. You have to file that Canadian limited partnership have to file U.S. taxes, but not the partners within that partnership.
Got it. Okay.
Yeah. So that in a high level, because
this is getting above my pay grade, but I got it. I think I have it. Okay.
Yeah. It's actually a really simple structure. It's just that we ended up going with a law firm downtown, Aaron Billis. One of their partners, Barbara, she specialized in cross-border.
Okay, so they were able to help you out.
Yeah.
Awesome. You need that type of expertise.
No kidding. Yeah,
okay.
that type of environment you do.
But and then do you still own this shopping mall?
Yeah, so we still own it. And it's we done a bunch of work to it. There was
So you're flying down there, coordinating contractors, you hire somebody to manage this thing down there?
So we have Site Super. We have a really strong property management team that takes care of all the day-to-day stuff. And so we asset manage. We don't run the
okay. And how did you find the strong property management team?
This was through referral again.
Okay,
so we had another
from
team.
The broker that you.
No, because we work with pretty big groups of brokers, Marcus Millichap, and within sort of the West Coast branch, and they kind of talking to them, they have been experienced. They have great experience with this particular company that we ended up signing on to, and they I think to date they manage over 10 million square feet of retail and office space.
Wow, that was a big score for you to get the right property managers in there pretty
early. And it's a huge bonus for us because they're pretty much all the states west of the Mississippi. So now we're looking at areas that they're already in because we can leverage their expertise.
Okay, so sorry, before we get there on this mall, what attracted you to the mall? You said the demographics of the area were obviously good. Was the mall an opportunity? Like, was it not fully occupied at the time with
Yeah.
retail?
So
Like,
this,
was it a good buy, or was it just like, it looks like has a good return?
it was at the time. It was it was a solid buy in the sense that it had the right sort of core.
The flagship tenants in there.
No, it didn't,
Oh.
and that's where some of the opportunities we saw in what we can do to kind of upgrade and transition some of the tenants that are more mom and pop into more of these national credit tenants. But what we saw was sort of it's right off the freeway. It's pretty dense. It had I think a 5-mile population, like almost 180,000. Average household income around that 60s. So it's the right mix. It's literally like 2 minutes away from the highway. So
Why was it being sold?
the owner he's downsizing. I believe at the time he had over 100. It's just
You could say
He was
old
cashing
guy.
out.
yeah, like he's been buying since the 80s. He went through like 2 recessions, and he picked this one up super cheap. It was like a note sale. I think he picked it up for $2 million, and I think we bought it for like 8.6. And he'd been cash flowing for like 12 years. He had this for quite a long time. So he was I think he was selling some of the less strong assets that he had in his
You're
portfolio.
freaking crazy, man, in the best possible way. Like, you take these courses, you buy some properties up here, you do creative financing deals, then you find Mike on our team, you do some rent to own stuff, then there's some public storage unit that you have to take the freaking guy to court because all the money's going to his new Mercedes or whatever it's going. Then you go to Colorado, and the best I can tell from listening to you is you just found a mall that seemed okay. And you raised money, and you probably bought it with a complete wrong corporate structure, from what I'm also gathering. And then you figured out the corporate structure over many years, and it got better.
Right.
And it was like you kind of lucked into, thank goodness for a good property management that has been managed this thing. And now you're a freaking expert in this stuff. You're an expert because you've made all these mistakes
Right.
along the
Yeah,
way.
you
And I
just-
don't
you
mean
just
any
have
bad
to-
mistakes.
yeah,
I just mean
absolutely.
you've made all these
Yeah,
freaking
how else do you
mistakes.
learn?
Everything is learning.
Yeah,
It's a learning
but you
process.
just went big pretty quick. Like most people are like, I don't know if I'm going to be buying a mall in my lifetime. You bought a mall. I was like, okay, the gold stores didn't really work out. I'm just going into this real estate stuff. But so good for you.
Oh, thank you.
Lucky you didn't lose all the family money that you raised.
Who's
Yeah.
most
That'd be a problem.
Oh yeah. You
So
said
there's a lot of
Vietnamese- this
there's
is
a lot of
Vietnamese-
stress.
Your Vietnamese background?
Oh no, Chinese, Taiwanese.
Taiwanese.
Yeah.
Sorry. That's good that you didn't. You took good care of the family's money. Now, are you the principal? Like, are you the person who's like managing this stuff, or is
Right.
it you and someone else in the? Like, do you have a direct partner that's equal to you? In
Yeah.
any
So
part?
I think throughout the entire process, I had multiple partners, and thankful for the contribution each and every one of them made. Different process in different stage. So I think with the commercial real estate, I have one partner, my buddy Emil, that we actually went to school together, and we didn't really. I thought he was a corporate guy. And it wasn't until he called me. He's like, "Hey,
is this another engineer?"
Yeah.
Oh my
yeah.
God.
So
I
he
can
was
only
working.
Imagine the conversation
Yeah.
you two have.
Just imagine the
Look at my
spreadsheets they used
spreadsheet.
to.
I put
Yeah.
in a
Oh,
new
you should
formula.
see his spreadsheet.
Yeah.
My spreadsheet is
When
pretty
two
simple,
engineers
but
start talking about formulas in a spreadsheet, I just immediately check out.
I'm very very fortunate. He's an operations guy, so he's pure. He takes care of all the numbers. So my responsibility is I go and find. I'm responsible for all the acquisitions, and raising the capital, and he takes care of all the operations.
Good for you.
So it's
all the acquisitions. So there's more. So this story continues. Do you go and buy more?
Yeah. So that was the first. That was like the first. So we I think
That was the first mall you bought.
Yeah.
Okay. So where does it go next?
So then we picked up a bank-owned plaza in Ohio.
How'd you find that one?
It was through brokers again.
The network.
Yeah, the network brokers, and then this one was like 40% vacant when we bought it. But it had, again, we looked at the fundamentals, and I think one of the key thing, at least in my experience, if you stick to the fundamentals, and especially location, especially for retail, like there's certain things that we kind of was shocking to us, like the in particular in smaller suburban areas. there is a breakfast side and there's like a dinner side. So then you'll find all the Starbucks, Tim Hortons on the breakfast side, and all the fast food diners or dinner sit down places on the
Side
dinner
of the
side.
mall or in
On
the
the street.
area on the street.
So like the side that's
really? That's
actually
the way
to
it's
the
broken
right hand
out?
side of the freeway, the easiest to make a right hand turn. That's the breakfast side, like going to work towards work.
Holy smokes,
get
that
on
makes
the-
so much sense.
Right. So, but I mean, in a denser area like Toronto and GTA,
Sure, it's
you're
everywhere.
gonna
It's all
have
over,
yeah.
it's all over because of
It's,
traffic
whatever
everywhere.
you can get access to too, right?
Right. Yeah. So
Got
then,
it.
so it's sticking to the, and again, appreciative of all the proper training, like what you guys are putting out is fantastic because people need to have a foundation of what how to look at numbers and how to qualify deals.
You only
Yeah.
get there after losing money and making stupid mistakes. But,
Yeah,
but
absolutely.
so the fundamentals of this one, where in Ohio did you say it was, sir?
This was a suburb of Cleveland. It's called
Okay, so but you like the fundamentals there because it was close to a highway.
close to a highway.
And there was a lot of houses.
Major artillery road on
Okay.
a major retail trade corridor. Like
Average
Costco,
family income was
like 120,000.
okay, so it was like the higher end.
Higher
of
end
Cleveland?
income
Okay.
is clean.
Okay.
It was near a lot of the
Wow, that's a
medical
good
clinic.
for that area. It's a suburb of
Yeah.
Cleveland to have that.
Yeah.
What suburb? We know a handful
know
of
a bit of
suburbs. I'm
Cleveland.
just
It's
curious.
in Avon.
So
So
is
it's
that the
west
side?
Yeah, west
West
of.
side.
It's actually, when we first got there, we're doing a site tour. We're like, it
Where-
feels like Toronto. There's like
Yeah, that's a nice income. That's a
Do we
nice
know
little
that
income
area?
that
Have we
area.
driven through
I just know it's on the west side.
it's
That's why
it's
I know. I
off
think I've
the
seen
main
it.
highway,
Yeah.
like 90.
Maybe
Highway
because I've
9
seen
or something.
signs or whatever.
You get off and you're like, wow, there's all these import cards. Like usually in the States, like especially in the
Oh,
secondary
yeah.
markets.
Tom
a lot
always
of
laughs at me
domestic-
when I'm driving. Like when we're in the Ohio area and I have a BMW, they're like, "Look," he's like, "Look, you're the only BMW in the parking lot."
Yeah, because one time actually we gave blood in this was actually in Pennsylvania on our
Yeah.
way to Ohio. We
Not
stopped.
gave. We went to get our blood tested.
Oh,
We
sorry,
just
sorry.
randomly stopped. Like, hey, let's
Sorry,
just
yeah,
stop
yeah,
and
yeah.
give blood in
Yeah,
Erie,
you know what?
Pennsylvania.
Yeah, we ended up getting our blood tested because they had some better companies there. It's better now. I think it was Wellness F. No,
Yeah,
was
I know
it
what you're
Wellness
talking about,
FX?
yes.
I still go to Wellness
So-
FX
yeah,
when we
so-
travel. I do it there because it's all nice on a nice portal and stuff,
Yeah,
right?
So we made an appointment in one of the blood labs, and we stopped in the middle of nowhere in Pennsylvania. And we're driving through this. It's actually a really nice small community, but everyone was staring at Nick's car. And he's like, "Why is everyone just staring at us?" I'm like, "Nick, I think it's the only BMW." He
Sorry,
had just
brand new
got it, a brand new spanking clean BMW. I'm like, "Dude, I think it's the car."
Yeah.
I
they're
don't know.
like,
It's
who's this
weird.
guy? Why is he driving that
Yeah,
car?
I'm like, "You're such a freaking show off, man."
Buy
Look at you.
American.
Yeah.
No, and you see, I mean, I've toured quite a lot of these secondary and tertiary markets, and certainly you stand out if you have a import.
You do.
I
you
almost,
do. Yeah.
I almost look at
noticed.
it being from Toronto as the reverse. I'm like, I cannot believe how many GMs and Fords and Chryslers there are in this community.
Yeah.
You know, it's impressive how like true they are to American-made cars. But okay, so you see a lot of upper income, and this during the site tour, you like what you see.
Yeah, it's just very comfortable. It's like we don't invest in areas that we won't be we ourselves aren't comfortable bringing our families in. So this particular one, we just everything was right. So then we're like, you know what? I think we thought the fundamental was there, and I think within 8 months, we filled it to 100%.
Wow,
And-
another good property manager, I guess.
No, like this one, most of work was done by us.
When you're buying these things, I'm curious. Like, if someone's selling it at 40% vacancy, they're likely not selling it based strictly off the income numbers of 40% vacancy because they're probably like, there's
Brick and mortar.
some upside, right? Or are they? Because if you're taking it an asset like that from 40% putting it to 80%, with the income that changes, the value change in these assets that you're creating there, depending on what you're buying it's enormous.
That's when my eyes lit up.
Yeah, no kidding.
So one of the challenges that we had, because Scott always talk about investing in your backyard, and we're like, oh yeah, we can do this. So we spent 2 years spinning our wheels trying to find retail in
retail
yeah,
opportunities.
it's
yeah. So like we, just some of the things we've done, like we locked up a piece of land in Kingston, which is kind of your secondary market in
Sure,
in
yeah.
Ontario, right? And Kingston's got a population of like steady 100,000, and so we locked up this piece of land that's right next to a regional mall, and we called like over 150 national credit tenants to see if they have any expansion plan out to Kingston. Got rejected in all of them. So we held on to this for like 2-3 months. We did all this work and just couldn't get anything to bite. And then we did it again in Bowmanville, which this time is much closer to Toronto, and same thing. Like we went back to the list of like 150, and they're like, oh yeah, you know, this site again. I mean, Bowmanville has grown much. This was like 6 years ago, so Bowmanville has grown much faster now. But this site was just behind the busiest Tim Hortons out there, and right across the street from Dairy Queen, in the circle of all these dealerships and hospitality
And
hotels.
no one was interested.
And it's still. I mean, I think today it's still a vacant lot. So it's just their focus aren't there. Their focus is in the GTA, but outside of that, it's pretty.
It's weird. It's always been that way in Canada. A little more conservative as well. So, but in the States, you're finding the opposite.
Yeah, so that's when we were like kind of forced to go out, because our hurdle rate, we try to generate anywhere between 12 to 15% per annum for investors, and with that kind of requirements, you really just you get squeezed out if you're in the core in the GTA. And if you go in a secondary market, the population growth doesn't drive enough retail demand, because a lot of the chains don't want to come in because they're saturated for whatever, what they have currently there.
Makes sense. So this one in Cleveland, the west side of Cleveland, you just you cold called some. How did you fill this mall?
So we worked with a leasing broker,
Okay.
and we actually, it was questionable why we retain him, because he worked for the bank that we bought the property from.
Okay. So he obviously wasn't really good at this.
Yeah, but some of the things that kind of the hints that we picked up, the pieces that we picked up from the bank and talking to him was like, banks don't like to spend money. So with retail tenants, you have to give them incentive, inducements, improvements to get them to come in. I mean, you guys probably very familiar with all that stuff, right? So and banks don't want to spend money, right? So a lot of times, and they don't fix stuff. So first thing we go in, we paint the whole facade.
The banks are always just like, look, take it or leave it. That's
Take
it.
it or leave it, yeah.
And here's the schedule of the 5-page schedule that says we have nothing to do with anything and it's all on you, right?
Mm-hmm. Absolutely. And so we saw the opportunity. We basically, come in, repave the parking lot, redid the frontage sign. The monument sign. So it make it all nice and pretty. Redid the landscaping, so it's got a lot of curb appeal. So it just showed really well, and I think that actually contributed
Classic
to
real estate stuff.
Yeah.
Same thing. I mean, it's the same thing with residential. Yeah. And sorry, going back to your question. So part of the reason why we had to go out of the GTA is because exactly that. Like every deal we looked at, everyone wants they were charging on pro forma.
Mm-hmm.
But in the U.S., because there's a lot more inventory and it's a lot more competitive, a lot of times you're buying it actually in place. So when we're buying, we actually bought. So that particular deal, it was 40% vacant, but 40% occupied, and we bought it at 7.5 cap in place. So the 60% of the building was
all
free.
upside.
Yeah, it was completely
Holy
free.
Smokes.
Yeah, so then it was like 300
That's
times.
crazy.
Yeah, so
James, good for you, man.
thank you.
Needed some work. I did need some work, but I'm not saying
risk.
that. I'm just saying, yeah. No,
there's
but you
tons of risk
bought it
here.
with a steady income stream in, like you said, a 7.5 cap.
It's
in
already
place.
cash flowing at 40% occupancy.
Yeah.
And we had to go to secondary lenders because it's not stabilized, right? So the rates are higher, but
But 60% of the mall is upside.
All upside.
That would be like subdividing a lot. Like in residential terms, that's like subdividing a lot where you just get like a free lot and you can build on it or something. But this is even better.
And some of the deals we looked at have out parcels that you can carve out to do.
Yeah, that's nice.
That's
when
another.
You get that.
Yeah, so it's some of the strategies that we typically look for.
Awesome.
For upside.
And I think more and more in retail, I don't know if this happened down there, but I see around here more and more in retail. I think some of it's easier to get some zoning to get some variances.
Variances, yeah.
Man, I'm struggling with that. Some variances to some of these lots because to some of the parking lots in these residential areas because in these retail plazas because they're putting in those extra units in the parking lots now. Like more and more you see that they're like, this parking lot's been vacant for so long. They provide a business case of why that area is never used and it can support another business. I don't know. Do you see that trend? Has that happened to any of your places down there? Do you see that trend happening down there? Because I noticed for some of those buildings down there, it feels like there's not as much parking, or the lots were never as big.
It's definitely been explored a lot more now because it's all retail. A lot of the focus is on frontage. So the out parcels has the best frontage, and you can charge ridiculous amount of rent. Like your inline space could be $12 a foot, triple net, or TMI plus TMI, different terms, but. Your outlots could be $40 a foot.
Oh wow! Wow, that's a big difference.
Yeah, so it's a lot more premium, and it certainly brings more traffic.
So that's why they're trying to get them out there. Then,
yeah.
So, interesting.
So this mall, once you started offering incentives and stuff, you were able to get it fully leased out.
Fully leased out in 8 months.
Way.
Yeah. So
in how long?
8 months.
Good for you.
So I mean that was like wow. Okay, so this is.
I don't know. Well, like I gotta just hold back for it. So the value of this changed from what to what? If you had to guess, from what you purchased it to now.
It was we sold it.
Okay.
Yeah. So
give us the ball. I don't know how much you want to share or not share. But can you give us just ballpark?
We went in at 1.85.
Okay.
You can't even buy a house in Toronto.
No.
Yeah.
No.
That's a condo, but with two parking spots.
With two parking spots.
So you bought an entire mall for 1.85.
Yeah, this was 28,000 square feet in I think a 4-acre parcel.
Oh my God. I'm just thinking about driving an electric scooter around there. If I bought a mall, I would just turn this into one big playground. But anyway,
you could build like bike ramps or
totally,
whatever, right?
Totally. And then you sell it.
And by the time we listed, it was like 4.6.
Yeah, awesome.
And we closed at 4.4.
Good for you, man.
Something.
And how long did you hold that from beginning to end?
16 months.
Wow.
16 months. So,
James, that's freaking incredible, man.
Thank you. And so, a lot of it definitely is, understanding, I think, have a good grasp of the fundamentals and what. So we don't.
But what's interesting, and you keep saying that, which is 100% correct. But the fundamentals, once you understand them, they're kind of can be duplicated. Like you've done. Like once you understand, this is not. You talk. We joked that you were like a nuclear engineer. I know you're a mechanical engineer, but like this isn't like rocket science, actually. Like it does take. It's more like you had the guts, man. That's more what this is. You had the guts. Seriously.
Yeah, totally.
In another country to do this?
Yeah.
So how many? So are there more malls?
Yeah.
Now?
So we're at 250,000 square feet right now, and we're looking at a few deals. And
what I'm curious at what other state or states?
So we're trying to stay focused in Ohio because I know. And it's not as sexy. It's definitely not as sexy. But I think we feel like the fundamental is there.
Yeah, but if you're finding good communities in a very stable place where banks are
and
selling,
it was depressed for a long time, right? Which is what was helps you pick up these types of opportunities.
And if banks are selling them at 40% in place. Jesus,
those deals are hard to come.
No, I know,
yeah.
I know they are.
But you know what? You took advantage of a good opportunity at the time because at that time, a lot of those deals weren't. I'm not saying that it was still hard to find, but with everything else going on, a lot of banks were looking just to unload assets. They're like, yeah, someone's going to buy this thing from us. We have all this other crap we're worrying about. Let's just get rid of it.
That's also true. You're buying at a good time, too. And I'm not trying to downplay anything.
No, absolutely. No, we totally understand that.
Yeah, the timing was good.
And that's why we kind of changed our investment philosophy. We actually picked up 2 other deals that are similar. And so similar. And one's in Florida. The other one's in Ohio, which we still own. And we're still undergoing the transition. But I think right now, because a lot of people are snatching up these deep value add deals. What you can see, like people always brokers love to advertise value add deals, and it's a lot of times it's just off beaten path that just don't have those fundamentals.
And the fundamentals, if I was to kind of just sum it up, it's near major transportation routes, of course. That's a good one.
Population density within 5 miles.
Yeah,
population
growth,
density within 5
population
miles.
growth,
and population
job
growth, and income levels.
Right.
I mean, it's the fundamentals that in all
of
real estate that we
yeah.
kind of look at.
Location. So.
Yeah, got it. Okay. And then how, you said your strategy is slightly changing now?
Yeah, so we're instead of chasing these more big pop, we're looking at more of the generational hold, longer, just stronger fundamentals, even stronger fundamentals than what we were looking at before. Higher density.
Well, you've made short-term money, and you
Right.
want to park it in longer-term assets.
Yeah.
It's interesting
So
what
it's
you're
like
doing.
trading the
Similar.
I don't
smaller.
know
Yeah,
if you-
totally. Yeah,
there's
because
like
monopoly.
Because you need the income early on,
Right.
and then you start taking some of that income. It's
And
no
the
different than
experience-
I
and the
think.
experience.
Yeah, and then you
right.
park that in some longer-term assets while you continue to try to some other things to make the short-term income to continue. Because then you're putting money in the bank short-term, and you're building value in your wealth long-term, right? Yeah, no, it's great.
So we do have a one Canadian exposure throughout the, I guess,
You
reaching out.
crazy
Why
person.
bother? Yeah.
Jesus.
While
Canadian
we're reaching
dollars?
out to.
But when they made all
Low
those,
class, James. Low class.
well, once the exchange changed after they made that money, then after the exchange changed, they're like, we'll buy it for free back here in Canada. Yeah.
No, so because we call the 150 national.
Don't
franchises,
tell me. One of them called you back?
One of them called us back, and we kind of they're like, okay, if you guys want to work together, we can try to make you guys our preferred developer. And we're like, oh, like, wow, this is awesome, right? So, and of course,
we can make you our preferred developer.
But you know what? But that's look. That's because I was thinking about it when you said that you guys did that twice. That you went down that list and called these guys saying, "Hey, we got this piece of like making them an offer of trying to work together." Do you know how few people would actually do that? That's there's a lot of hustle involved there that people just
On
would
percentage
never
basis,
do.
it's
getting
basically
no,
zero.
getting no 300 times.
Yeah, and some of them probably just flat out were just like, "Who the hell are you leaving
Yeah.
me alone?" It wasn't a nice, polite, "Hey, thank you very much for the opportunity. We're
We're
not
too busy."
interested."
Yeah.
Yeah, it's like, get the hell out of here. Who are you? So yeah, that's cool. Sorry. So I cut you off.
No,
Go ahead.
absolutely. It's hilarious because sometimes you have to do the things to kind of get ahead. So we actually finished construction the first ever rooftop patio for St. Louis. That was the tenant that
Oh, really?
the franchises that called us and say, hey, we have this, we want to expand in Collingwood, but
Is this like St. Louis Wings?
Yeah.
St.
Okay,
Louis
got
Bar and
it.
Grill. So we actually bought the land and built a building for them
In
up
Collingwood?
in Blue Mountain. Yeah.
Awesome.
Yes, it's 8,000. It's a small four unit, 8,000 square feet.
For you, that's nothing. That's like a rounding error, James.
No,
When did you do that though?
It just finished construction last June.
Oh, recently. Yeah, cool.
Yeah.
On the
So-
Collingwood Strip right there?
Just across the street from the Canadian Tire,
Okay,
from
got it.
Freshco.
Yeah, got it. Awesome.
Yeah, so it's the first ever rooftop that overlooks the mountain. So
Oh,
if you
very-
guys ever go down there,
Yeah, very cool. I mean, now we got to make a point to go there.
Yeah.
But it's interesting. I don't know if you heard. I don't know if you were at the last Rockstar VIP thing when Peter Kafka spoke. Were you just laughing? So for those of you listening to this, we actually just had Peter on this podcast.
Oh, no way.
Yeah, like end of last week,
Mm-hmm.
and he was sharing how he works with pension companies who basically go around Canada and buy mismanaged malls. So it's sounding so similar to what you're doing, and then they spruce them up. They improve the facade. They put up the better signage, and in their world, they do a lot of pads. So they drop a new pad on there, which is just basically a
remember
block
that,
of
yeah.
cement to put in a Tim Hortons or a Shoppers,
Right.
Shoppers Drug Mart that might not be there, and then they either sell them off or they keep them. And their whole strategy is this whole mismanaged mall opportunity. But that's like pension fund money doing it. You've decided to do this on your own and not in Canada, in the U.S. So yeah.
Yeah, and part of the reason why I really appreciate the VIP group is for numerous years, I would have to go down to the networking sessions in the U.S. to kind of get the camaraderies and sort of the just be involved with, and that's actually when I saw you guys. I think it was like 3 years or 2 years ago, and I rejoined the Your Life Your Term, and then after talking to a couple of the VIP members, I was like, I got to join because it just
That's been a pretty good group for us.
it's a great group because everyone's doing something, and regardless of what you're doing, everyone's doing something. So
And I find in Canada, the one thing I have to give credit to the U.S. is they do a better job of networking and hanging out with each other. In Canada, we're a little more conservative, a little more timid. No one really talks about what they're doing. So we feel
Yeah. In the States, there's conferences about everything every day. And the weirdest random thing, like how to properly put a spine on a book.
How to
And
prune
it's
your
just,
plans for
y-
optimal
yeah,
growth.
and there'll be like
just
1,000 people there. You're like, what
Yeah,
the
what-
hell? You know, there's like everything everywhere.
One hotel will have like the 3 most random conferences at the exact same time going on.
And I think part of that, what I find is because the barrier to entry for the commercial real estate investment is pretty high. Like you're, in the GTA, any mall is 5 cap, 4.5 cap, and you talk about like a single pad is sub 5 cap easily. So it's usually the bigger hitters. So when I go to like the conferences here for commercial real estate, it's all
Institution. It's like
You're
It's all
institutional.
institution,
next to
yeah.
institutional money.
Yeah,
Here's
we're
James.
like-
They don't even
yeah.
know, man. You're
Like-
like an assassin sitting right next to
Man,
them.
I
waiting
wish.
to
Yeah,
strike.
I wish you came with. I was just sharing on another podcast we just did that. I went to recently to a develop. Like it wasn't a development. I don't even know how I don't know how I got invited, but it was some Bay Street. Like it was.
land
builders.
and development conference, right?
Was it? But there was only like 50 people there. It wasn't even like a real conference. It was like on the 27th floor
Oh, wow.
of some building. Like I'm like, where am I going? Right. And I walked into this place. I'm like, I have a funny feeling this is going to be quite interesting. And I'm there, jeans and like just a kind of a light spring sweater, kind of like you're dressed now. And I walk in the room. I was a little bit late, so of course I walk in the back. There wasn't that many people. And I walk in, and it's just all dark suits, all dark, like
Bay
50,
Street
60,
traders.
and it was all institutional money and that level of developer. And they're just like, I'm sure they were like, who the hell is this dude and what is he here for? I wish next time I'm going to one of those, I'm going to call you. We're going together. It's going to be awesome.
It's just two of us hanging out.
Yeah,
in
and
the
we're going to
back.
take a drone and we're going to fly the drone while someone's talking and take a picture of the room and how well we stand out. It's going to be a good time.
Awesome.
But James, that's
Awesome.
a two-way street. I just want to share something. You said that you found this whole VIP group at Rockstar and something. It's a two-way street. This only works because there's people like you who we've been able to kind of all get together and hang out together.
Yeah,
so
absolutely.
thank you for trusting us in kind of, working with Rockstar at the beginning. Now you've out, James, you're like way past what we're doing.
No, it's,
but
everyone's doing something.
Yeah, no,
And it's-
totally.
You know, whatever capacity, it's just impressive to see. You want to be, keep motivated, be motivated, and regardless of what
Yeah,
what
different.
assets
It's a
you're-
different field of
Yeah.
play, but they're still players.
Yeah.
And it makes you. I agree with you completely. We do the same thing. You're looking for people that are just doing
Because
stuff.
I can't go to those, institutional guys. Hey, let's have some
Well,
power sessions.
Well, a
right?
lot
Like,
of the institutional guys don't own real estate themselves.
they don't. Yeah,
No,
they
you're
don't.
They're
right. It's
acting
different.
on behalf of the
They're a
corporation.
corporate role.
They're in a corporate role, and it's a little different when you're out there hustling yourself, doing these cold calls and being the preferred developer for some of these guys, or going and dealing with.
Oh,
banks.
totally. Yeah.
It's-
In that room, I don't think any of them did.
Yeah.
There was
And
a couple builders.
And I can't tell if I had to guess the amount of times you've had cold sweats in the middle of the night, or almost crapped your pants because some news came your way that freaked you out. I bet it's in the dozens of times. But now how long have you been doing this? How long ago did you get the public storage unit or invested into it in Sacramento?
2012.
So that's 7
About
years now.
7, 8 years. Yeah.
Yeah, so you have you've managed to squeeze in a ton of experience in a very short amount of time.
Thank you.
Yeah.
Thank you. Oh, definitely signing a loan doc that's like $8 million.
Yeah. What am I doing?
I hope these tenants don't leave.
Yeah.
I'm curious, in these buildings that the leasing agent was putting in, let's say the buildings before, so like that First Ohio one, or that level of building, I don't know, compared to what you own now. I'm not sure how it changes, but so who were the people going into those things? So when you took it from 40 to 80%, right? We'll just stick on this one building.
Sure.
Well, yeah. Who went in? Is it like mom and pop shops?
Yeah. So kind of going back to the retail apocalypse.
Yeah.
Yeah. We focus in the neighborhood centers that are necessity based. So nothing fancy, not the class A big box, because those are going to have some challenges.
Yeah. So like dry cleaners, or not
so
even.
like banks, gyms.
Okay.
So one the center we have in Denver is anchored by Planet Fitness.
Okay.
Like 18,000, 19,000 square feet. Banks, restaurants, they call it fast casual, fast sit down. Salons.
The
tanning.
restaurants make sense
So
too. In the States, I feel like
service,
States
all
is restaurant-
service,
restaurant
yeah,
service.
all
So all
service
service-based
based.
stuff.
Retail just seems to be changing to service-based
Right.
type.
It's all the experience based.
Yeah, but the big box Best Buys,
Yeah, they're
they're
going through
those
some
those
shaky
ones are
times.
they've reinvented their stores too. They're trying to change it up because they had to, and
Yeah,
we'll see
yeah.
long term how it goes. But that type of environment's kind of changing.
So it's sorry, going back to your
Yeah.
question, Nick. It's a lot of it, and what we pride ourselves into is our experience dealing with the mom and pops, having a short stint of small business background myself, we looked at our tenants as our partners, right? So if they succeed, and it could be a newer business, but obviously we prefer at the stage, we prefer not to take on that risk.
Sure,
We'll look
yeah.
at your financials, and if you can't cover 3 years of rent, and we're not taking you on. But that's just we understand the struggles that small business will go through, and so we try to work with them. It's like just even 2 months ago, we relocated a aquarium store to another location because we wanted to optimize the front building of one of our centers, and we didn't know that he mismanaged his budget in the construction, so he couldn't pay rent for like 6 months, and he owes us like $30,000, and that's a lot for
For anyone.
for anybody.
Yeah.
Right. So we try to work with them on instead of I think the institutional guys would be like,
Yeah, they'll change
Get
the
out.
locks.
I'm bolting the door,
Yeah.
and you're out, you SOL, right? But we because he's been there since 2014, pretty stand up guy. So we're like, you know what, let's work with you. So I believe last week he just cleaned up his balance.
That's cool.
And yeah, just
I
mean,
believe that stuff goes along as an investor on the investor side. So like on that side, I don't know, man. I've just in my life, I've always believed that type of approach goes a long way. And you're an engineer taking that type of approach, so it's even harder because usually the engineers are like, out, get out.
But he's the direct owner too, because sometimes the corporate guys, they're just looking at the returns.
Yeah.
It means nothing to
just
them.
cut them off.
Yeah.
But I mean, sometimes it bites you in the
Yeah,
in the butt.
I agree.
The same center, we have a dance studio, and the lady bought the business, and it was like 3 years ago, and she owes like $50,000 of rent, and we're like, just been trying to work with her and even trying to give her rent concession because she was complaining that the business was the person that sold her the business with the Rolodex took half a client or whatever.
Some stories.
And then we're like, okay, I will work with you. But it turned out that she was having a fight with her neighbor, which is like an office type of, and so she went to like the municipality.
Oh, geez.
She went to sign petition with rest of tenants trying to kick them out, and we found this out, and we ended up taking her to court because we just delayed it too long to trying to work with her. So it's just but I think
I know what you mean.
Benefit of the doubt, give him another an opportunity to kind of come around. And
I thought you were going to say she took the money, was driving a new Mercedes like the other guy in the story.
So our leasing team found out that she was trying to She's trying to locate to another center, and we're like, we're not here to like
That's
backstab
funny.
you,
Well,
but
there's bad tenants exist, residential, commercial,
absolutely,
everywhere.
Yeah. But it's easy. It's a little bit easier for retail. You can just
James,
even here, right?
How old are you now?
37.
37. Have you extrapolated out the next 10 and 20 years of your life? The path that you're on? Like if you literally just take your asset base right now, the stuff that you're owning and managing and all that stuff, and just assign any sort of growth percentage to that and just go ahead 10, 20 years. Have you ever looked at that? You should do that one day. It's going to blow your mind. And you're having, I don't think you were going to stop now, right?
No. And certainly I think it's funny because if I had to take this on at this stage in life with, we have a very young daughter. Awesome. It's probably not going to happen. Like I'm very, very fortunate that I took that endeavor, at least the first 5 years.
You're not like Tommy, you quit your job with like a mortgage and two young
he
kids
wasn't
at
going
home.
as crazy as I was going. I was losing it. But yeah, good for you, man. It all worked out.
Mad props to that.
No. Hey, listen, we can't say enough about you. And I just want to thank you for sharing this story, because I think especially in Toronto and Canada, I think sometimes as Canadians, we downplay what we can accomplish. So there's going to be someone definitely who listens to this that feels inspired by what you've been able to accomplish, because maybe they're stuck in a corporate job or a life that they don't like, and listening to your story is really going to give them some incentive to maybe explore, read another book, take action in some way, call 300 people and get rejected or whatever it is. So really, I mean, you didn't have to come in here and sit down and share this kind of stuff.
And James, it only took us 8 months to finally make it happen.
Yeah, because you were lost in my inbox for so long.
It's absolutely my pleasure.
So if someone's listening, can they find you? Like, do you have a website where people can?
Okay,
what can you share?
My company is called SL Equities. So you guys can visit slequities.com, plural. and you can email me at james@slequities.com.
Okay,
And I'll
awesome.
be more than happy to give a hand, or if you guys are looking at commercial deals, whoever the listeners are.
Listen, every time you find those 40, what was it, 40% occupied on in-place revenue, selling on in-place revenue, we'll be in on those.
We're
all
good.
day
We're
long.
interested. Just let us know. Yeah.
But,
just there's a lot of I know there's a lot of challenges working, not in your backyard, and especially when you can't really see the assets frequently.
Sure.
But there are some benefits, at least what we find. Some of it has to do with depreciation, because in the U.S. you can actually change the allocation of the land versus property, and we're finding this out as we hold on to some of the assets longer. For example, I think CRA allows you in Canada at least 80-20. Like 80% land, 20%. Sorry, 80% building, 20% land.
You can change that allocation.
You can change the allocation because it's a lot more business friendly in the US.
You could work that to your advantage.
Absolutely,
Totally,
and so you still have to convert back to the CRA standard or formula, but because you can go above 80%, maybe not so much 90%, but anywhere between 85 to 87%. Even if you convert that back to the Canadian, the CRA standard, it's still a heck of a saving in terms of depreciation. So more money in your pocket, and it's deferred, but at least it's more money in your pocket for the duration of the hold.
Wow, at some point it feels like you should write a book about buying. For Canadians, about buying in the U.S. Not only would it be something like a good project for you, but it would be a great lead generator for people to find out about you.
Cool,
Because just the amount of knowledge you had, just your story, but all these lessons about running the numbers, some of the spreadsheets and that kind of stuff, you definitely have a great book in you, man.
Thank you.
For real.
Thank you. I appreciate that.
Yeah. Nick, anything else?
No.
James, anything else?
No.
Thank you again, man. Really.
No, it's an absolute
blown
pleasure.
Us away.
This is like cracking nuts. So I listen to a lot of podcasts.
Yeah, cool.
So I was like, oh, what is it like to be on the other side?
Yeah. Now you listen to yourself and you turn it off right away. No one likes
I
don't want to listen to myself.
Nick and I rarely listen to ourselves. One time I was walking up to a car and they had one of our audios playing in the car and I heard my voice coming from the car. I freaked out. I totally freaked out. Turn that off. Yeah. Thanks, James, man. Really appreciate this. Thank you so much.
Thank you.
Hey, everyone. So hopefully you enjoyed that. James is just a great guy. I think we will be having him back on the podcast many times with various updates. So just love to sit down with someone like that who's taking so much action and just figuring things out for themselves, just a resourceful, resilient person. So if you are listening to this and you want to join on with Rockstar Inner Circle and meet people like James yourself, you can go to rockstarinnercircle.com/member and see all the benefits that Rockstar Inner Circle members get. rockstarinnercircle.com/member. And I will tell you right now, one of the greatest benefits, our team here is obviously, we're really proud and it's a great team and there's lots of good information and newsletters and audios and classes and the whole bit, but just the people that make up the membership are what make it so special and that we're the most proud of and grateful for. So you can check all of that information out at stopped being able to speak again at rockstarinnercircle.com/member. And listen, it is possible to live life on your terms. Don't let anyone tell you it's not. Sometimes it's a challenge to be able to carve out the path to be able to live life on your terms, but it is 100% possible. Start surrounding yourself with the people that can help you get there. They will, speed up your success along your own path and your own journey. So that's it for now. Until next time, your life, your terms.